Welcome to Startup Accounting 101. This is a video series to help entrepreneurs and founders understand basic accounting concepts for starting up a business. Today we're going through a financial projection, and this template is available for download for free from score.org. So just go to the template gallery and you can just find this template and go ahead and download that. I'll put their link in the description below. So today we're just going through the first two tabs, directions and starting point. So we'll go ahead and just get started with step one. So my name is Winnie Koo, and my company is Kubernetes Consulting. Now I follow a calendar year, so my starting month is January. If you have a highly seasonal business, I would advise you to talk to a tax accountant to see what the right month could be for you and your business if it is highly seasonal. But a majority of businesses, most businesses would follow a calendar year, and the starting month would be January. For me, I started focusing on my business this year, so my starting year is 2023. So now we're just moving on to the next tab, which is starting point. This is essentially the startup expenses for year one, the starting balance sheet, essentially the opening balance sheet. These are all the things that are needed to just get the business up and running. And so this starts off with the fixed assets. So the first question would be, what is an asset? An asset really is anything of value owned by the business. And so there are different types of assets. And this section is the fixed assets. So by definition, fixed assets has to be a long-term asset. Long-term is, at least 12 months or longer. You have it on hand for at least 12 months, and most fixed assets are used for 5, 10, 20 years. So it really is a long time that you're using these assets. And again, this is a long-term tangible piece of property or equipment that a firm or company owns and uses in its operations to generate income. So these are the most common fixed assets that are used to help you make money. Now, some companies may have to actually buy land or buildings. So the first two sections here, you're going to put the property value, the actual, assessed value of this real estate, and you're going to put it here. Now, another sort of accounting definitions is furniture, fixture, and equipment. And these items, assets, are movable. So this is movable furniture, fixtures, and equipment that have no permanent connection to the structure of a building. So these are going to be like your desk, your chair, additional monitors, bookshelf, so anything that you can move. And so this template breaks it up into two separate sections. So furniture, fixtures, and then equipment. For me, as a consultant, my main equipment is a laptop. But for you, it could be a forklift, a tractor. It could be a camera. So that you would put into the equipment section. Now, furniture and fixtures, I have a home office, I have a desk, I have chairs. If you have, let's say, a restaurant, like the tables and chairs would be furniture and fixtures. And these, again, are movable. But if you're going to be renovating, if you have a storefront and you're renovating and you're putting up drywall, lighting, doors, a new bathroom, again, anything that you're changing to the actual structure that's connected to the building, that is considered a leasehold improvement. So all the investment that you're going to make to renovate goes into this section. If you need a car or a vehicle for your business, if you need a truck or a van, that you're going to put here. And again, this is like the market value of the vehicle. And if there's any other fixed asset that wasn't mentioned before, you go ahead and put it into other. So for depreciation, I would not adjust anything for now. I will review depreciation in a later video, but for now, I would advise just not to adjust these numbers for now. So we'll go ahead and just move down to the operating capital section. So here are things that you will need to get the business started. Essentially, day one, here are the things that you will want to have. Now, pre-opening salaries and wages. If you need to pay somebody up front to kind of hold them, sort of lock them down for the contract, that's what you would put into pre-opening salaries and wages. Prepaid insurance premiums. If you have to pay, if you want to pay for like the whole year and prepay any insurance you'll need, whether it's car insurance for that vehicle, if you are a doctor, medical, you need malpractice insurance, workman's comp, general liability, any of the insurances you're paying up front for the whole year, that's what you would put in prepaid insurance premiums. For inventory, if you have a storefront, if you have an Etsy, and you need to store up inventory for people to buy, you would put essentially the value or the purchase price, like how much you purchase it for, that's what you'll put here in inventory. Legal and accounting fees. If you had to pay somebody to, let's say, file a patent, trademark, intellectual property, if you were to hire an accountant to get your tax ID, so to get the EIN, employer identification number from the IRS, or to put together your articles of incorporation, those sorts of fees, that's what I would put here. In rent deposit and utilities, again, if you have a storefront and you have to put down a deposit, that's where I would put this, that deposit. Supplies would be anything that's consumable, like you're going to use up, office supplies. So if you had a printer, like a 3D printer, the actual printer would go up into equipment, but the filament would be in supplies. If you are paying for Google AdWords, Facebook ads, any type of promotions or marketing, I would put that in this section. If you need a license to operate your business, like if you need to be a licensed and bonded contractor, your real estate license, this I would put into the license section. Now, if there's anything else that wasn't mentioned before, you would put that here. Working capital. So by definition, working capital is the difference between the company's current assets and its current liabilities. So simply putting it, let's say current assets is money, your cash, and then the current liabilities is any expenses you have to pay in the next month. So whatever you have left over, that's essentially the money you have to use to run the business. Like this is considered, that's what's working capital. This is stuff that's working for you. If you're just starting out the business, basically it's your cash on hand. So if you were to open up a business checking account, like how much would you put in there to comfortably kind of get started? So for me, it's about 4,000. So here, now you've got a total fixed asset amount. For me, it's about $3,500. And then total operating is about 16,500. So I need about $20,000 to get the business started. So if we move down to the next section here, which is the sources of funding, like where is that money coming from? So here, the total funding needed, I need $20,000. So I have been saving up. So I am going to invest about, let's say, $15,000, putting that into the business. So that's owner's equity. Now, I'm a little bit short. I'm still about 5,000 short. So let's say I've got some family. I've got my parents. I'm going to ask for like $2,000. I still have a little difference. I'm going to put the rest on a credit card. So that's, credit card debt, it's about $3,000. Now, I needed 20 grand, and then now I have 20 grand. And so now it's green. I'm fully funded. I can, I have the funding available to kind of start up the business. Over to the side, these are different. Like if you had actual property and you had a mortgage against the property, you would kind of put it here. And then this would be the interest rate. So I'm just going to leave it as is. Okay, let's say it's a 10% interest rate. And then how long I have to pay off that debt, or how much I would want to take to pay it down. So these numbers that could be kind of adjusted. Now, if you already have an existing business, this essentially is a balance sheet. So if I were you, I would go into your financial software and download or export your balance sheet. And there will be a section here somewhere on this spreadsheet to put every item of your balance sheet. So here are some of the current assets here with cash, AR, accounts receivable, prepaid expenses, with your fixed assets, other assets. Then here is where I would put the equity section. You probably need to add retained earnings and net income into your owner's equity section. And then here, of course, is the liability. And here is the rest. Accounts payable and accrued expenses are also other liabilities. So you'll be able to find a spot on this tab for every line item in your balance sheet. So that is a review of these first two tabs. I'll create a video for each sort of major section of this projections template. So as they say, what do they say? Subscribe so you can keep up with the next videos of this template.